Welcome to the Roy Morgan Weekly Update. And firstly today to our weekly metrics, starting with consumer confidence. Roy Morgan, in association with the Australian Retailers Association, forecast a record spending of $6.8 billion over the Black Friday sales weekend. And as expected, following the big sales period, ANZ Roy Morgan consumer confidence has dropped, down 2 points to 83.5. There was a decline in buying sentiment as well as a decrease in confidence about personal finances over the next year that drove the weekly fall. It's gone back to exactly where it was a month ago. And for a second straight week, inflation expectations are at a 2-year high. The weekly ANZ Roy Morgan inflation expectations are unchanged at 5.6%, leading into today's Reserve Bank decision. So Australians are now expecting annual inflation of 5.6% each year over the next 2 years. The high official inflation readings are a clear indicator of the pressure being put on household budgets and explain why the Reserve Bank decided to leave interest rates unchanged at 3.6%. Now to Roy Morgan measures of employment and unemployment, the measure that really matters. And the news is mixed in November. Real unemployment was virtually unchanged at 10.2%, so an estimated 1.63 million Australians are unemployed and looking for work. Looking directly at the employment figures, there was good news, with employment up 119,000 to over 14.3 million people in employment. The increase was driven by a jump in full-time employment, up 210,000 to over 9.2 million, but part-time employment was down 91,000 to around 5.1 million. Overall, these figures meant the workforce grew in November, driven by the rising employment. However, the news for underemployment was not good. The number of people wanting to work more hours increased for a second straight month, up by 63,000 to more than 1.7 million Australians. Total unemployment and underemployment, what we call workforce underutilisation, increased 0.2% to 20.9% of the workforce, an estimated 3.34 million people. Most worryingly, the estimates for November continue a long run of high figures, with more than 3 million Australians now unemployed or underemployed, a 12th straight month above this level. Comparing November employment figures to a year ago shows the sluggishness in the Australian economy, with employment down by 91,000, full-time employment's down 64,000, and part-time employment's down 27,000. In contrast, both unemployment and underemployment have increased markedly from a year ago. Unemployment's up 165,000 and underemployment is up 266,000, an overall increase of 431,000. Now to business. Australia's businesses are still more confident than consumers, but business confidence stalled in November, down 3 points to 98.7, now below the neutral level of 100 after the Reserve Bank left interest rates on hold in both September and November, and again earlier today. The drivers of the drop related specifically to views on the Australian economy over the next 12 months and how businesses view their personal prospects heading into 2026. Both of these indicators declined in November. The Roy Morgan Business Confidence Series is based on interviews with 1,200 businesses each month to gauge their views on their company's prospects, as well as their assessment of the broader Australian economy. Over the 2 months of October and November together, the most confident industries were mining, which recorded a business confidence of 126.6, financial and insurance services on 120, manufacturing on 114.2, public administration and safety on 113.3, and professional, scientific and support services on 111.8. Confidence in the mining industry was significantly boosted in recent months when Prime Minister Anthony Albanese signed a multi-billion-dollar deal with US President Donald Trump, covering access to and development of Australia's large resources of critical minerals and rare earths. And finally today, to some exciting news on Roy Morgan's AI-powered advertising tool underpinned by Helix Personas. Roy Morgan's Workspace Copy Engine. Leading home builder Simmons Homes has significantly improved its digital marketing performance after piloting Roy Morgan's Workspace Copy Engine. The pilot, driven by the agency Sonar Group, delivered a 2.3 times higher conversion rate on Google and a 40% reduction in cost per lead across Google and Meta combined, compared to Simmons' business as usual activity. As digital advertising becomes more crowded and AI reshapes how brands reach customers, Simmons Homes set out to move beyond generic home buyer messaging and answer a fundamental growth question. Who are our best customers? How can we find more people like them earlier in their journey? To learn more about how Roy Morgan Workspace Copy Engine can drive improved results for your business, head over to the Roy Morgan website. And looking forward to next week, I'll be back to bring you the latest data for federal voting intention for December, as well as the final results for consumer confidence and inflation expectations for the year on the eve of Christmas. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening.